Alright, good afternoon everyone. Today is Tuesday, February 26, 2013. Ton of opportunity today. But before I get into that, let's go over the results. We had plus 38 ticks on gold, plus 4 ticks on the Russell, plus 5 ticks on the Euro, plus 9 ticks on crude oil for a total of plus $582.50 per contract. Took us 10 trades to do that. We made our 2 points this morning in 3 trades in 24 minutes. Okay, that's what it took. So I got to put all that in the spreadsheet, and I will get around to that in just a minute. Hang on. Let me just do this. What did I say? 582.50 plus 28.90. So we are now at $34.72.50, $3,472.50 per contract on the month. We're inching up on that $4,000 mark. Hopefully we'll get there by the end of by Thursday, by the end of the day Thursday, the end of the live trading room. But we'll see. What do we need? We need let's say $530 between now and the end of the live trading room on Thursday. Alright, if you have not taken the free trial with us, guys, go to www.CFRN, like Nancy.net/apply, sign up for the free trial. In the free trial, you get access to all the charts that you see here, all the indicators that you see here. You get to sit in our live trading room for 2 hours per day for 5 business days. In the live trading room, you'll see me put trades on, take trades off, tell you when trades are setting up. I miss a bunch of the trades in the live trading room. I miss a ton of the trades in the live trading room. I did pretty well this morning, but I should have done better. Just based on the number of trades that were available, there was a ton that was available today. Anyway, it was a pretty good day, and I think most folks had a pretty good day today. I'm not going to say that everybody did, but most folks did. Let's see. Let's just start out, and I'll start going over the trades. Okay, I'll start out with crude oil. On the crude oil, I think we traded crude more than anything else today to end up with the results that we got on crude. That's because we had a losing trade on crude. Where the heck was that? There it was, right there. All right, our first trade on crude was right here. Okay, we made a little bit of profit on that. I'll show you the pictures, and then I'll just show you how they were applied. Now the same thing, this is a crude chart from a couple months ago now, but it's a crude chart. Okay, well, maybe not a couple months ago, it was the G on crude, and we're now trading the J on crude. So it was last month, or the month before, something like that. Anyway, the same thing applies to every single market that we're going to look at. And we're probably going to look at 4 or 5 markets right now to go over all these trades. Okay, so what we look for here is the bullish cross of the MA1, which is the blue and red line. See this blue and red line right here? We look for the bullish cross of that over the BBC, which is the green line. That gives us direction. Then we look for price to pull away from the green line and back down to the BBC. Okay. When it pulls back down to the BBC, we look down here to see if we have divergence on the slingshot. Divergence on the slingshot all by itself, not divergence between price and the slingshot. On the slingshot, we want to see the green line and the blue line diverge. Okay, that's what we want to see. Now, if we get that, and we get an up close on this bar, that's where you look to enter, on the up close. All right, that's it. That's all there is to it. That's the trade. That's the trade off the BBC. All right, over here on the short side, you look for the bearish cross. That is the MA1 crossing below the BBC. Price to come back up and test the BBC and give a down close. You look for the bearish divergence. In this case, whenever you're trading off the BBC, you want the cycle to be the right color. All right, the cycle to be, well, in this case, the same color as the bar. Blue for the long trades, red for the short trades. All right, that's it. That's all there is to it. In this trade right here, we had the bullish cross. The space in between was step 2. The pullback and test of the BBC was step 3. Step 4, bullish divergence, blue cycle, get long on the up close. We did, we took profit. All right, that's all there is to it. That is the trade off the BBC. Now, that's not the only trade there is, but using the same exact set of indicators, there are a number of times, and I can just point them out in here. There's a number of times where there's so much momentum in the market that price doesn't actually pull all the way back down to the BBC. In those cases, you have to draw a trend line down the tops like this. Okay? And you look for an up close on the other side of the trend line. If you're going long, look for the up close on the other side of the trend line. And check to see that you still have divergence. Because what you anticipate when you have divergence like this, down here on the slingshot, is that the green line is going to work its way up into the cycle. All right? Green line up into the cycle. That's what you anticipate. So, that said, let me bring up another picture for you. Here it is. And there's two occasions when the trend lines come into play. One is when price has so much momentum that it doesn't pull all the way back to test the BBC. And the other is when, like over here, when the cycle is the wrong color. Like right here, the cycle is blue on the down close. Or the cycle is blue on the down close off the BBC. So you got to wait for the down close below the trend line. All right, that's it. That's all there is to it. So right here, there was a long trade we took some profit there. We got break even on this one. Let's see. Price was moving around quite a bit in here. We missed a bunch of trades in here on the crude oil. Now, when we got long over here, I had said when it breaks out of this box, look for it to get up to 93.21. It got up to within a tick of 93.21 right here. Then it had a pretty deep pullback, and then it went shooting right up through 93.21. It stopped up here, turned around, and started coming back down. There were a bunch of opportunities in here that I haven't highlighted because I was plenty busy trading other markets. You can see on the way down here, I got short right in here. The yellow arrows are trades that I actually took. The ellipses that you see on here are trades that set up that I didn't take. All right. The yellow arrows right here, I traded the short right here. I ended up taking a break even on that. You can see that kept going down anyway. In here, I went long. This was a test of the BBC with an up close with bullish divergence and a blue cycle. I went long and it stopped me out. I think that had put me down. Yeah, that did put me down on the crude oil right there. All right, I got it back right over here. All right, I got it back there, and there was another trade that I had taken right in here. I took this one right in here for a little bit of gain. This one put me back to positive, and this one added a little bit more on it. Now, right in here, this was the close above the trend line with the bullish divergence. Okay, price moved away, but it had so much momentum that it didn't pull all the way back to the BBC. Closed up above the trend line. I know I was showing stuff at the time, and I dragged this chart over when this was happening. I dragged this chart over, and I said there's an entry right there, and I put it back. And I put the order on, and I ended up getting filled on the order after all. And I showed everybody that in the live trading room. Let's see, then we had a bearish cross. There was an opportunity to short right here. You see the bearish cross, test of the BBC, the down close, bearish divergence, short right there, down it went. Another one right here, down it went. Over here, the black line got up above, so there was no trade in there. I had drawn the trend line up waiting for it to give us the opportunity, but it didn't give us the opportunity until over here. Okay, and by that time the black line was above the green, so there was no trade. If you did take it, it still worked, but no trade for me. There was another opportunity right in here, and this was sort of wrapping up the morning session. Okay, right in there. After the morning session ended, there was a bunch more opportunity right in here. I watched this whole thing collapse right here. I was on the phone, and I watched all that happen. So there was a ton of opportunity there. We ended plus, I think, +9 on crude. Is that what we had? Yeah, +9 on crude. Okay. On the Russell, let's go back to the Russell now. I believe we took just the one trade on the Russell today. Yeah, just the one trade, it looks like. I pointed this one out. This was a good learning, teaching moment, or learning experience. I'll leave that alone for right now. As the day started out, it was really choppy back and forth across the BBC. Finally, it got down here. If you shorted right here on this down close, there was no divergence down here when it closed down. So that was kind of a risky trade to take. By the time it came up here and hit the BBC, The trend line was over here. There was blue on the cycle, so the close below the trend line was there. That dropped down about 5 or 6 ticks. Before it turned around and came up here, there was an opportunity here on the long side, again here on the long side, and up here is where I finally took a trade for 4-tick gain, I believe. All right. It turned around, price completely turned around right here and gave an opportunity to short in here and another opportunity in here. I tried to short this one, but I didn't fill, and then I was showing everyone over here how I thought if we got a down close below this line, you see how I drew a big thick red line there. If we got a down close below that line, how I thought that we would see a significant move down, and significant it was. There are a couple of other opportunities on the way down to short the Russell during that move. One was right here. Okay. Then it changed directions, and there were opportunities on the way back up. Right in here was one. All right. I didn't draw the trend line on there, but you can just eyeball the trend line. There it is. The up close above the trend line with the bullish divergence. Okay. Over here, changed directions again and was moving down. And again, right in here, moving down again. Okay. The same thing over and over and over and over and over. It just, on days like today where there's a ton of activity, I managed to take, the equivalent of, well, what was it, $582, almost the equivalent of 12 points out of the market. And it was, 11 and a half points, roughly, ES points out of the market. But there's so much opportunity. And, when I'm going through the live trading room and I'm showing everybody the trades as they set up, and I'm jumping from market to market to market, I end up missing a bunch of trades. But that was it. I took one trade there on the Russell for plus 4 ticks. Okay, right there at the top. Let's see, gold. We did pretty well on gold this morning, but that was because we got into one particular trade that went for 20 ticks. We had, just look at the opportunity in here. Just look at this opportunity. Now, gold moved around really fast, a lot today. So, in hindsight, when you're looking at this, you have to look down here to see how many bars there were in a single minute. Sometimes, this was perfect in here, but it may have been moving so fast that you couldn't have done it. Okay. We did do what we could do with the gold. We started out, well, hang on. It started out in here, gave a shorting opportunity right here was the first one, went for a few ticks, turned around, changed directions. There was a long opportunity in here. Then we were looking for an opportunity on the long side. That didn't happen. Oops, that didn't happen. It gave an opportunity to short right there. Turned around and changed directions again. We didn't have any divergence. It was just going back and forth across the BBC here up until the high impact news events came out, and Bernanke started talking, or somebody started talking, and the market started to move. Gold had a huge move up today, and then it tanked pretty well, and then it started moving back up after it tanked. Okay, now you see in here where it was moving really fast. This whole span that you see here is only 14 minutes. Okay. There was one opportunity here on the long side. There were a bunch of opportunities to trade in here on the short side, but it was moving really fast. So it was hard to get those trades on, honestly. In here where you see I had highlighted some areas in here, we didn't have any divergence on this one, so I should take that off. If I blow it up just a little bit, the next spot where we did actually have a divergence, if I just take this trend line right here, if I take that trend line and I move it up like that, the next spot where we actually did have divergence was right there. So right there was the spot to get long on that. All right. It was moving around quickly. We finally had divergence again here where it tested the BBC and gave an up close. You could have gotten in there. I did actually get long over here on the up close above the trend line. We took some profit there. I got long over here on this one. I took 20 ticks profit on this move up. That was a big move up right there where, and it moved quickly. I had more than one opportunity to take 20 ticks. It actually moved up here, and I realized I had 20 ticks profit, even better than that, and I missed it, and then I put a target up at 20 ticks when it pulled back right here. I had dragged my stop up to about right here and put a target up at 20 ticks, and it took me out at 20 ticks profit right there. You can see it kept moving up, but we lost our divergence down here. Then we had bearish divergence, so the price, the cycle needed to reset. All right, it didn't reset until right over here, and there was again a ton of opportunity. And once we got in here, I said if we have, we break out of this box, we get a nice up close above this box, or a close anyway with this box, we should see significant movement. We finally got an up close above the box right here, but we didn't have any divergence to support the trade. Okay, so we weren't able to get into it. Another box scenario over here, but it went all the way over here like that. Now look at this, is 1050 right here, and this is 1051. So all these bars were in that 1 minute. I know it seems like this is a lot of time right here, but it's not. The next opportunities came right over here. Okay. Okay, the next opportunities came right over here, and right in there we had bullish divergence for the move up. Okay, I wasn't placing any trades in there. I'm just showing you what was happening as the market was going. I said it's just going too fast for me to try to explain trades and place trades all at the same time. There was an opportunity there, an opportunity there, an opportunity here, and there, and there, and there, all on the long side and short side on this one. But when you get the divergence, everything is the same from market to market to market to market. It's all the same. If you go back to those, those pictures that I said right at the beginning of this recap, you'll see it's the same thing, regardless of what market it is. It's the same thing over and over and over. Now, there's a good question. My perfect exit without a target is, well, I trail my stop. Okay, when price is running, what you anticipate, like right over here, or even right over here. I'll show you the trade right here. Okay, go back to the pictures. You'll see it came down, tested the BBC, and gave an up close. So right here on this up close is where you're long. You're anticipating that the green line, this green line right here is when the trade was, is going to work its way up into the cycle. All right, it pulled back a little bit to your break-even point, and it worked its way up into the cycle. Now, when it gets up to the cycle like this, that's when you start thinking about an exit. All right, I know that was right here on this move up, but that's when you start thinking about an exit. Okay, the gain on that, 1608.8 to, right up here, 1609.9. That was just 11 ticks on that one. But you start thinking about an exit. That doesn't mean exit. That means trail your stop up close. So if you're trailing your stop up close, like behind the black step line right here, it went all the way up to 1611.3. So 1608.8, 1611.3, that's 15 ticks. Is that right? 11.3? 25 ticks. Sorry. Let me just, 8.8, 9.8, 10.8, yeah, 25 ticks. And it did it again right here. All right, the entry on this one was the up close right there. Again, looking for the green line to get up into the cycle. When the green line gets into the cycle, that's when you anticipate that it's going to pull back and give you another opportunity. All right, so you just manually trail the stop up. In this right here, this is gold. It's $10 a tick. $10 a tick on gold. Okay. We finally started to trade it again over here. It was pretty close to the end of the morning session. We got short in there and we got short in here. Okay. And there were more opportunities, and after the morning session ended, there were even more opportunities in here. I mean, up and down and up and down and up and down. It was exhausting, really. It was. I mean, it's exciting, but it's exhausting. Does DT have the ability to trail a stop automatically? Yes, it does. I wouldn't do it. Not on an indicator, though. Not that I know of, not on an indicator. You can have it trail, you can have it step up 4 ticks every time it moves up 4 ticks. And that's basically what the indicator does. But it was a lot of trading. There was a ton of opportunity. A ton of opportunity. All right. Now, I know for the people who were in the live trading room for the first time today, it was probably overwhelming, because there was just so much going on all the time. All right, that was gold. I didn't trade anything on the NQ, but as usual, there were a ton of opportunities on the NQ. If there's a ton of opportunity everywhere else, you can almost times that by 2 on the NQ. Like right here, On the way up, there are a ton of opportunities up here. On the way down, I mean, just looking at this, I don't know if you guys are there yet, but just looking at this, I can eyeball the trend lines. And you just see the trend lines, you see the price pulling back, and you look for the divergence. That's it. I mean, it's not rocket science. It's not real hard. Once you get used to everything, it's pretty straightforward. Okay? You just have to spend the time in front of the screen using our proprietary indicators. And it's right there for you. Even the ES. The ES had some good activity this morning. We pointed out a few spots on the ES. I know there was one fellow who said, do you guys ever look at the ES? Because we hadn't been looking at the ES. I said right in here I wasn't going to go long. Yes, it does. I said in here I wasn't going to go long into the weekly trading zones, and I didn't. And we waited and waited and waited, and there was an opportunity to short right here on the other side when it started to pull down. Could have shorted right there. You could have entered it again right there or right there. Either one of those. This was the first spot. There was a second spot here that I highlighted in the live trading room. It hit it again here, but we didn't have any divergence. Okay. The up close right in here was another spot to get long. That was at 90.75. That one went up 1.5. It turned around and started going down. I wasn't really focused on it over here, but right here, nope, you would have needed the down close. So right there would have been the entry on that one. That would have been at 86.5. It drew down to 88.5. So you probably would have stopped out right there with a 2-point stop. Okay, but you know what? You get right back in the game. Here's another one right here. Right there, 85. That dropped down to 82.75 for 2.25 points. Changed directions and gave you another one right here. We're outside of the morning session now on the ES, but this was 86.5, and it's still going. Okay, that was the ES. The 6E, we took 2 trades on the 6E this morning. We took this first one right in here. We got just a few ticks on that. I think, what did we end up with the 6E? The 6E, we were +5. I think we got 3 ticks on this one and 2 ticks on this one or something like that. But the same stuff over and over and over and over and over and over and over again. Yeah, some of you took 9 trades on the 6E, but you were killing it this morning, Frank, in the pre-market. How many trades did I take on the 6E? Did I take 2 or 3? I thought I just took 2. That one? Oh, 3. That one and that one. Okay. So I have 11 trades on the day. Hang on, I gotta mark that down. 11 trades. I thought I took 2. Alright, so I took a little profit on this one, a little profit on this one, and a break even on this one. That's how it worked for me on the 6E. It's the same stuff over and over and over again. You see, we had the bullish cross, it tested the BBC, the up close with bullish divergence. Got long, took a little profit, it kept going up. There was an opportunity to short here, an opportunity to short here. An opportunity to go long over here, which I did, and I took a little profit on that one. I shorted over here, and I took a break even on that one. And there was just a ton of opportunity. For those of you guys who like to get up early and trade in the pre-market, Frank, how you were up 52 ticks. Is that what you said? 52 ticks on let me just divide that baby by 4. That's 13 ES points equivalent on the euro in 9 trades. I didn't, Charlie. Do you want me to? All right. So in here, right there was one. Right there was one. Now I know you were doing some other things in there too, Frank, like trading. As we showed in the partners meeting about a month ago, like probably shorting right in there. Maybe not right there, but right in different opportunities that present themselves. But it's there. For everyone who has not taken a free trial with us, go to www.cfrn.net/apply. Sign up for our free trial. It really is free. We don't even ask you for any credit card information. All we ask for is a phone number and an email address. You know, that's it. If you're taking the trial, if you sign up for the trial, take the trial, you know, do the whole experience. Download the charts, download the platform, download the indicators, the whole experience. You know, the way you're really going to benefit from it is to really immerse yourself in it as much as you can. Okay, it's 2 hours per day for 5 business days is the trial. You know, you can download the indicators and look at the stuff at night if you want. If for whatever reason you can't look at the trial during the day, then send us an email at support@cfrn.net and let us know that you're interested in taking the trial, but you don't have those first 2 hours every day. Just let us know. All right. With that, I believe we are going to wrap it up for the morning. Not for the morning session. Sorry, just went right back into the morning session. I'm going to wrap up the recording portion of my recap anyway. Again, we are plus 3470 something. Let me tell you again. I got to add it up. Yeah, that was right. Plus $3,472.50 on the month. And we have 2 days left. See if we can hit that $4,000 mark. And we'll see if we can do that over the next couple of days. All right. If you have not taken a free trial with us, again, go to www.cfrn.net/apply. Sign up for the free trial. Okay. With that, I am going to wrap up the recording, and we'll send it off to Dwayne and David and Robin and